Hello, I'm Dave Rachowczyk with Coldwell Banker Burnet and the DavidRHomes Team, and today I've got a special guest. We're going to talk through some do's and don'ts of the buying process, and particularly things that you should expect during the loan approval process. So today, without further ado, let me go ahead and introduce you to Chris Jensen. Chris, thanks for coming out. He's with Stearns Mortgage.
Thanks for having me, Dave.
Let's jump right into some of those do's and don'ts.
Yeah, so don't buy any large ticket items on your credit when you're thinking about purchasing a house.
No new truck?
Correct. You don't want to go out and buy a new truck like that. What that would do is that could throw off your debt to income ratio and actually hurt the amount that you can qualify for.
Okay, well what about those 60 days same as cash or even 6 months same as cash? I know I saw this really awesome L couch. It's going to fit perfect into the new home. What about those kind of deals?
Yeah, Dave, don't do that. Anything that pulls your credit during the transaction can affect it.
Okay, so what about opening a new credit card? I've heard that actually you can build credit by opening a credit
No,
card.
Dave, you see these sales, save $30 to open a Kohl's credit card. What that can do is actually lower your credit score, so that can raise your interest rate and give you higher mortgage insurance and affect what you can purchase.
Don't save $30 by opening up that Kohl's charge card, because it could effectively cost you thousands of dollars over the life of the loan.
Exactly. Now for your existing credit cards, if you have an old card and don't use it, don't close it. And it can actually be detrimental to your credit score if you close an older credit card.
Okay, so let's actually talk about some of those old credit cards and existing balances on them. What kind of percentage should I have on a credit card to give me the best return, or to have the most impact positively on my credit?
Yeah, so Dave, what we've seen from experience is generally a revolving or an installment account, when it's paid down below 25% is where we see an increase in credit score. And a really big boost we've seen is below 10% on those accounts as well. That's where the credit score can really jump up.
Okay, Chris, now I know I've also heard that there's certain collections that you should not pay off, or you should be careful about which ones you do. Can you tell us a little bit about that?
Yeah, so generally, most lenders don't require collections under $2,000 to be paid off. Also, medical is not required to be paid off. Obviously, check with your lender for your specific situations. Really old collections, don't pay those off unless your lender requires them. They can actually hurt your score by validating the old debt.
That makes total sense. Okay, so what about other things? Like, what if I have an opportunity to take a new job on?
Don't change your job during the transaction. Change it after. So lenders verify your employment before closing, and if you switch jobs, it's going to delay the closing.
Okay, so don't even put in your 2 weeks notice, because the lender's going to be out there verifying that you're employed and that you're currently still going to be in that job. Well, how about mattress money? People have a lot of cash saved up sometimes. They'll have it in a mattress, they'll have it in a coffee can. Sometimes they'll actually have a relative that just says, hey, I want to give you cash for closing. How should they handle that, and how do lenders look at cash?
Yeah, so that's a great question. Cash can be a deal killer. So what lenders do is we look back 60 days on your bank statements. And any non-payroll deposit, we're going to want to know what it's from. Put it in your account now. 60 days from now, it will be considered seasoned, and we won't have an issue with it. You can use it for the transaction.
Is there anything special that they should be doing whenever they are getting those gift funds? Sometimes people will get down payment assistance from family members, so how should they be handling that to try and make it easier for everybody in the process?
Sure. Well, what we recommend when getting a gift from a family member is the donor wires it directly to the title company. This way, the title company can verify the funds, and it matches our gift letter, so we don't have to get any information from the donor as far as their bank statement and other items.
So we don't have to verify funds from the donor then?
Correct. It cuts way down on paperwork.
Awesome. So if you're ready to see what it's going to take to get that first mortgage, best thing to get the process started is just to start the conversation with you. Is that right, Chris?
Exactly. Even if you don't think you're going to do something 6 to 12 months from now, let's just sit down, have a conversation, and make sure you're on the right path.
Sounds good. Thanks, Chris. We appreciate your help. Thanks for coming in.
Thanks for having me, Dave.
And thank you for listening. Have a great day.